Hey, everybody, welcome back to STRonomics. I'm joined by my co host and good friend and new father, Kenny Bedwell. What's up, buddy?
Hey, how's it going?
It's going very, very well. I'm
Good.
excited. Spring's finally here. Bookings are coming in better than they were 3 months ago, hopefully for everybody around the country,
Thank
even those of you
goodness.
in Logan, Ohio, that Kenny and I love our friends up in Logan, Ohio.
Hey, real quick. I talked to a good friend of mine, who you know as well. I won't say any names, but she was telling me about they asked somebody in there's a Logan, Ohio group or Hawkins Hill group, and they posted for hosts, and they posted like the podcast, and they were like, "What do you guys think of this?" And like it started like a huge like debate, over their market and stuff, and so. Anyway, we're just glad to be here to stir the pot, and yeah, and be we'll probably get sponsored in that group or something. So
I still think we should go up to the entrance to the state park or
we
whatever it is
should.
there, the sod farm that they have in Logan, Ohio, and do a live
There
broadcast
you
up there.
go. There you go. I told her, I said, well, hey, look, maybe we'll just scare people away, like competition from coming in, and actually help you guys out.
I got to
So
know
she
who
did
that
that.
is now. I don't know who that is.
You know who it is.
I do.
Yes.
It's a lady.
Yes.
What's the first letter of the first name?
Uh, S.
It doesn't really help a whole lot.
Okay.
Oh, okay. I real estate agent.
No.
Okay, I don't know. We'll
I'll
talk
type
later.
in the chat or something, but
There you
yeah.
go. Yeah,
Anyway,
put it in the private chat. Who is it?
yeah.
We don't hate Logan, Ohio, though, everybody. I mean, honestly, we're just here to tell you what the best places are to, invest in. And, Kenny goes over the data, and then I'm here as a color commentator to show you how to take that data and literally make more money with it, right? I mean, that's the whole deal. And, in all fairness to Logan, Ohio, it was number one on Kenny's list in September of 2021. It's just not there anymore. And it's really interesting. It's not what we're talking about today, but the trends change, Kenny, and maybe this should be
Yep.
the topic actually of, what we invested into 6 months ago, and it might have been a top 10 market. It's not a top 10 market anymore. There's this ebb and flow of desire and traffic, and just it's why shopping malls are dead today after COVID, right? It's why certain cities, have are a buyer's market today versus still a seller's market. It's a demand, in those marketplaces, and I'm sure you're seeing them fluctuate. I probably log into your platform as much as you do. I'm in buying mode again. I'm going to Kentucky tomorrow morning. I'm leaving at 5 a.m. to go look at that property that I sent to you the other day, to put my eyes on it. And that I believe that whole Bourbon Trail is an emerging market, especially knowing what they're investing into that entire bourbon community over the next few years. It's crazy. That thing could blow up. It's already really good, but that doesn't mean it's going to be great 5 years from now or 10 years from now. So what do you see in those trends? I might have to retitle this podcast when we're done, by the way.
Yeah. What am I seeing in those trends? So it's really for me, it's kind of hard to make that projection beyond maybe a year, simply because we don't really know what we don't know, like what's going to happen. However, I just from experience and seeing like what COVID did to certain markets, and call me the Blue Ridge hater, but like Blue Ridge, for example, or even Broken Bow, blew up some of these markets to a point where the competition has just gone through the roof, and there's so much new construction, so much new listings in the market where these markets saw 60-70% increases in total active listings over the last 2 to 3 years, where or even more than that, or 200% even, where it's just like there's just so much influx in the market, and then all of a sudden there's a setback, meaning people adjust. People are no longer going to Blue Ridge, like flying in to Atlanta to drive it to Blue Ridge. That's not a thing. It's just people coming from Atlanta. Well, when people from Atlanta, Georgia, and maybe Charlotte, maybe Knoxville area stop going to Blue Ridge, and they start traveling and flying to other destinations, they see a setback in that industry. We saw the same thing in Broken Bow. We're seeing the same thing in a lot of other
It's
big
happening in
markets.
Beach Mountain.
Yep. Beach Mountain. I mean, a lot of markets are have some sort of saturation going on at different levels, and so with emerging markets, we have to be careful because sure, yeah, and please don't take this as like I'm dissing on Kentucky, but that is a great example of an emerging market. But are there any things in place that are going to restrict that growth? Because you just said it. I mean, you're going to have at least 10 people who are listening to this podcast start looking at places in Kentucky now,
Mm-hmm.
okay, so that's 10 more people in the market. There were only 60 people last week in some of these towns in Kentucky, and so like, how is that going to impact it? And then over time, as that the word gets out,
Yeah, I probably shouldn't have said that I'm going up to Kentucky tomorrow. Thank
maybe
God.
we just
By
start
the
the
time this
podcast
airs,
over.
I will either be under contract or not
Yeah.
be under contract. And you guys need to go back and watch my STR Unfiltered episode of why you should never follow, I hate this word, an influencer into a market. And that, Kenny, that's what happened. It's what happened with probably Brandon had a lot to do with Blue Ridge, and I had a lot to do with Beach Mountain, and Avery had a lot to do with the Smokies, even though that's a much bigger, market. And then people went into Broken Bow, and people started talking about that on social media, and it's why you should never get investment advice just from the general population of people on, social media, and you got to have some concrete data behind it. But it's not just Logan, Ohio. Please don't think that Kenny and I hate Logan, Ohio. We don't hate Blue Ridge. We're sharing the data with you. And the same things happened. There was like 424 new STRs in Beach Mountain alone. I'm not talking Banner Elk and that whole Boone all the way down the Newland area. I'm crushing in Banner Elk. Not so much in Beach Mountain. It doesn't help that we didn't get any snow, there during the winter market either. But it is, I don't know anybody in that market. And I started my own private Facebook group up there. I don't know anybody in Beach Mountain that is doing well. I literally have a ski and ski out house, like one of the best locations that I co-host. I don't own this property. And it's $299 a night. Sleeps 20 people.
Wow.
That's insane. That was $2,000 a night when we had snow. And I don't think there's going to be demand through the entire summer. I think what happened to Logan, Ohio, where that drops. And remember, there's also a difference between Logan, Ohio, and what is it? Hocking Hill, I think is the name. But Hocking Hill is the sub-market that is much stronger than just the prime market of Logan, Ohio, right? Mm-hmm. If you look at that whole western North Carolina area, there's like 25 different sub-markets that's there. And it makes a huge difference of where you go. Interestingly, Kenny, when I was making my investments up there, we talked a lot. I didn't know the area very well. And Kenny's the one that turned me on to Banner Elk. And I spent $1.6 million on a purchase, the biggest investment I've ever made into a short-term rental. Thank God it's panning out well, or I would blame Kenny, just like all of you from Logan, Ohio. But it was this niche that you found in the market, right? It was the size at that time.
Right.
And there was like nobody over occupancy of 14 or 16. And I remember the first property I looked at when I went up there, Kenny, was in Seven Devils. And there wasn't a view, and there was like a goat farm right next to it. The house was great. Game room, amenities, hot tub, little waterfall, all this type of stuff. But man, am I glad I did not buy that property. And, that I bought the views, that I bought, newer, I bought bigger, 2 acres, all that type of stuff. And it was in Banner Elk versus being in Seven Devils. And I think a lot of people don't understand the difference between Hocking Hill and, Logan. They don't understand the difference between Ellijay, Blue Ridge, or Hiawassee Lake, or whatever that is. And they think that Asheville is everything from Hendersonville to Maggie Valley, to Swannanoa. It's not. They're all different markets, and you have to look at them on their own accord and then the individual property.
Right. And I think that's important too. Like, when you're talking about Kentucky, there's a lot of tiny towns there, and you say, oh, well, the Bourbon Trail, it's like this long line. It's like, well, certain areas on the Bourbon Trail have better foot traffic than other areas. One common fallacy I see people, 2 million people a year go to the distilleries, on the bourbon trail. Well, not all the distilleries, they only go to certain ones, and they might hit up, certain parts of it. So it's not all 2 million people going to your area that you're specifically targeting in, this particular market in Kentucky. It's certain areas and sub-markets. And that's true about every other large regional market. When you say the Smoky Mountains, I mean, that one's got a lot of foot traffic, don't get me wrong, but not everybody is going into Surveyville. Not everybody is even going into Gatlinburg. Most people are, but it's just like understanding how these markets function and the sub-markets within will help us get a better idea of what's missing and what we should be going after. Sorry, and I'll just add this too. When you said don't follow influencers, I've seen people do that and make that mistake. And what ends up happening is they just go into the market. They don't pick the right locations. They don't do the research behind, okay, I'm just following this person to the name of this market because they're here and they're doing well. And that's the mistake, is they'd stop at that point of research and don't carry on.
Like the Bourbon Trail, that's a long trail, right? And
Correct.
it's in the place that I sent to you that I'm going to see tomorrow. I'm attracted to the property. I've got to learn about that location, right?
Yeah.
That's the deal. I could take that property and plop that down anywhere in the country, and the property is going to be the same, and it's attractive, and it's especially once I get done with it. It's got a lake, it's 7 acres, all this stuff. The price point's great, but if it's not in the right spot, then I'm not going to make that investment. Speaking of the right spots, this is just fucking reckless, Kenny. Sorry, I don't usually say that on our podcast. I save that for my own. I literally just got an email. I'm not going to say who it's from. It is from a lender. And it's the best markets to invest in today. And did you get this? Check your email.
Okay, I'll check.
Literally, metro markets, Nashville and Houston.
Oh my
the
God.
2 top best metro markets, urban markets to invest into.
Those
So
are not
off
mine.
base. The flyable markets, Waikiki, Hawaii, and Jackson, Wyoming. Are you fucking kidding me? All they're trying to do is sell DSCR loans. Drivable markets, Galveston, Texas. I'll give them that. Chattanooga might be viable. Best markets in the country.
Chattanooga's got some crazy restrictions.
They do. And this is what I'm saying about being reckless. And if you follow this and you just go into these markets and you start investing without doing your own deep due diligence, you could make a bad investment. And I'm sure these people are going to figure out who this is and they're going to be pissed off at me, but so be it. This is the stuff here that's positioned for them to sell you property and do loans. Nobody should be investing into Waikiki and Jackson, Wyoming, unless you got like $10-20 million net worth and it's a lifestyle asset. That is not going to work. You might be able to find 5 properties in Waikiki that will work. You might be able to find 0 properties in Jackson Hole that are going to pencil out to give you even a 10% cash on cash return, or even to generate any type of cash flow is going to be nearly impossible there. What do you think about those markets when I tell them to you?
I mean, if you're an investor, you should be looking at those markets. If you're looking for a second home to, vacation to and spend time with your family, and you probably will have to pay a little bit of money for that, because they're not going to carry your costs either.
Dude, Kenny, I got so excited about a year ago. I saw this place in Jackson Hole and it was like $1.7 million when I was looking in Montana, and I pulled up and I saw the house and it was this 10,000 square foot mega mansion, and then I saw, that's for 1/8 share in the property.
Yeah.
I mean, you can't buy anything there for less than like $5 million. It's ridiculous.
Yeah, and then they also have some permitting stuff too, so
very challenging.
I mean,
but this is the stuff that I'm talking about. This email will influence people, right? And it's reckless on their part, and so that's one of the reasons that we talk about Logan, Ohio, Beach Mountain. And look, I'm not just saying Logan, Beach Mountain's probably worse from an oversaturation standpoint. Blue Ridge is the same thing, Broken Bow, because you need to be on alert. We're not saying don't invest there. We're not saying the market sucks. You can go to a shitty market in this industry and find a property that's going to be good. It's all at a property level, right? I mean, that's the
Right.
thing that I hate, Kenny, and I saw it in my group yesterday. Hey, what do you think about this market? Who's investing in this market? It's not about the market, it's your property. It's the duplex, quadplex, you know, tiny home, 10 acres, single family home, whatever it is. That's what's going to determine if you're making money or not.
When you A lot of people don't like realize that because in real estate investing, it's not really it's just not how people think, because they kind of copy. It's common practice to copy. This person did it this way. I'm going to do it that way, and it's going to work out. And that's very common in like long term rentals or multifamily investing.
Agreed.
A very like template boilerplate, like do this, do this, do this, boom. Like and the problem with short-term rentals is it's a different animal. It's completely based on how you run it, how you set it up, where the property is located, all these other variables that don't necessarily impact, like for example, long-term rentals. It doesn't matter. It just has to be in the town, and it's going to pull the same rental rates as, maybe one neighborhood's nicer than another, but this neighborhood's nicer than another, and it can generate X amount in rents because that's what the market has set. Whereas in short-term rentals, it doesn't matter. You're playing on people's emotions because that's what you're getting them to book there. And so what happens is this now investment style or the way you're investing, it changes your strategy on how you need to think about it. And what I mean by that is it actually kind of resembles how we're looking at maybe stocks or ETFs or buying into a company that you actually have to create an investment theory or hypothesis about why and what's going to work for your investment strategy. So what I mean by that is if I was, saying, look, what are some common blue chips or really popular companies that I see that are going to be successful, that are going to last the stand of time, or, certain things that might happen politically or, economically. And, let's say Amazon, I'm really bullish on Amazon. And so Amazon is my play, and I'm going to buy Amazon, and I believe it's going to last. And this is why. And people aren't doing that with short-term rentals. And I think we need to think of it like that too. It's one thing to go and invest in a market, but there's no like theory or hypothesis as to just why, people go there, but where are they going and why are they going there? Like, if you want to go to invest in Kentucky, cool. But like, what other investment strategies can you do? It's not just buying single family homes. It could be buying multifamily, buying tiny homes, like you said, setting up glamping sites like that. Those are separate strategies that can be implemented into any type of market. Even buying a certain bedroom count is a particular strategy. People aren't creating that as they go into they're just going in and trying to find something that fits their budget that they can afford.
And it's interesting you bring up, kind of the stock market ETFs or buying blue chips. You can still buy Exxon or Apple or, Tesla or Amazon, whatever. And most of those companies are too big to fail at this point, especially, if Amazon was going to fail, the government would bail them out in some form or fashion. There's no question. But you look at those blue chips, but a diversified portfolio is going to have blue chips. Like I only own Berkshire Hathaway stock. I'm a blue chip guy. I'm not taking flyers on crypto and, all this, penny stocks and, all the T-sheets and all that type of stuff. And I wish I would have taken a flyer on Tesla back in the day, before it was Tesla. Everybody does. But you talk about those blue chip markets. Broken Bow is not a blue chip market. The Bourbon Trail is not a blue chip market. The Bourbon Trail is like a flyer. Right. Mm-hmm. And, is it going to continue to grow? Can it sustain? And it's so long, if you will, that you have to pick that right spot. There's no such thing from an investment standpoint as the Bourbon Trail, in my opinion. It's going to be those little micro areas of the Bourbon Trail. And like the place that I'm going to tomorrow, Kenny, is like almost 90 minutes from where Eric is. Right. Yeah. So like, I can have the discussion with him about it, but it's so not going to be relevant to the geographic location that I'm going to. And those are things that I think people don't understand. It's like the people that get crushed investing in the stock market, in my opinion, are the ones that watch Squawk Box and Ron and Sana, and then they make their investments based off what they see on CNBC, and they're not doing their own research. I look at like Squawk Box and CNBC as Facebook today for short-term rental investors, right? And I mean, why would I go invest into trucking companies, Yellow Transportation, where I don't know anything about them? I don't know anything. I know a little bit about Berkshire Hathaway, but what I do know is it's the gold standard stock with, that my grandfather held and my mother held and that I've held. And, I've bought 3 shares on my own and, inherited 3 shares and they're not going to go away. Those things aren't going to go down to $50,000 anytime soon unless they do like a, whatever that would be, a 6-for-1 split. Apple, I think, is a sound investment. So the question becomes is I think your risk mitigation, it's risky to go into an emerging market. It's risky to go into an unproven market. The Smokies are going to be there forever. Gulf Shores is going to be there forever. Disney's going to be there forever, right? And some will argue that Disney's saturated. I think Disney is saturated in segments of the market geographically and also bedroom count size. So what's interesting is you don't see anybody asking Kenny in a Facebook post, hey, I'm thinking about going into this market. Who's been successful with this bedroom count and this micro location? And that's the conversation that should be happening. And then it should be the next step. Hey, Kenny, you know what? I'm thinking about going into, what's the name of the Watkins Glen? How many bedrooms do you have there? Can you share your how much revenue have you done? What are your operational costs? What are property taxes? Would you do it again today? Kind of going deeper into those conversations that would revolve around also somebody that has that similar hypothesis or that similar plan. And that's where, being around people outside of just social media that are trying to achieve the same goals of you, that are making similar investments, becomes absolutely critical. It's why I love having these conversations with you and like the super team. The interesting thing about the super team is we all are experts in different areas of business and application and that type of stuff. But the conversations that we have together, like when we did our photo shoot or, when we're in at the conference together, those are the conversations I want to have, but nobody's having those specific intentional conversations on social media.
Yeah, no, because we're all focused on just short, quick, post, hey, anybody here? And then all the realtors jump in. Oh yeah, it's a great market. So
exactly.
I guess my like kind of last like closing thoughts here too is when you're looking at an emerging market. So, we'll take the Bourbon Trail, for example. That yes, bourbon's not going to go anywhere and that market will continue to climb and gain traction. However, on the flip side of it, you got to think about supply of the number of listings will continue to increase as well. And so you can't expect, we're at like a point in time and you can't expect to be 10 years down the road and be at the same point in terms of performance. Like you're either going to have to increase or change and adapt in some certain ways. And if you're not in the right location, you then have to start competing on price. And it's almost like a zero sum game where you lower your prices, your competitor lowers their prices, and you keep going down to make that money. And so, sure, supply hasn't met demand yet. We're not oversaturated in some of these markets. Sorry, not oversaturation is not a word. It's saturated. But we have to think about in the future, what if all of a sudden there were just communities of short-term rentals built nearby? Would I still be able to compete and outperform everybody else? We can't predict everything. We can't say, okay, what if it was the exact same house? So no one's going to do that. But we really need to value the location, the submarket, and the type of property we have when we're trying to make those decisions and entering an emerging market.
I think what you just said, looking 5 years down the road, people don't think that way. They think about the here and now, right? And a lot of them aren't even thinking, and they may not know that, most of the data that they're getting is the trailing 12 months, right? That it's not looking into the future. It's not even real time, today. And, that's what you got to understand. It's kind of the whole pro forma thing, right? Of understanding where you're getting your data, what that data is based on, putting it into a pro forma, and you have to be looking into that future. It's why I shouldn't have even mentioned that I'm going to, the Bourbon Trail, because then people will start looking into it. And I'm sure people looked into Watkins Glen when, they found out that you invested there. And it's more about the individual property than it is about the market. Look, I've got a dud in Beach Mountain right now, and I've got my second best performing in my portfolio in Banner Elk. They're literally like 9 miles apart. But they're two completely different markets where most people just think they're part of Western North Carolina. So that's where going deep in your research versus wider is way more important. That's why we advocate for running performas. Bakey and I got into a conversation with somebody in social media yesterday, about they're not running performas. And I just did an STR Unfiltered podcast that went out this morning about how can you buy a property without running a performa. And, I think that's something that I would like to maybe we tackle in the future, is kind of running through a performa and, going through what's the important data that can't be missed, when somebody's going to invest. Awesome. Thanks, Kenny.
Thanks, William.
I got to go back to Bill. I got to get
I gotta go back to Bill.
No, I don't like William at all. Thank you guys for joining us on this episode of STRonomics. Happy hosting, everybody.